Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Well, joining us now on the program is Michelle Lam, Greater China Economist for Societe Generale, to take a closer look at the Chinese economy. After yesterday, we got some PMI numbers from both Caixin and from the government, the official PMI, that were better than expected and well above 50. Michelle, thanks very much for joining us here for some discussion on the economy. So you had exports that were pretty positive, manufacturing looking better, not great, but better, but consumer spending still a little bit weak. Where are we in this process of resuming strength in the economy?
I think for the Chinese economy this year, it would be fair to say that on a cyclical basis, it should be better compared to 2023. After all, we've had the government issuing 1 trillion special CGBs to support more infrastructure investments, which should be coming through in the first quarter, second quarter this year. And at the same time, as for example, you look at the U.S. manufacturing PMI number yesterday, it seems that the external demand is also on a better path for this year. So I think that would also be spilled back to the China's manufacturing sector. But the only thing is that for the consumer demand, it is still pretty weak. And that's really to do with the fact that the property sector is still in a very bad shape in China right now.
Yeah, no doubt about that. Deflationary pressures do remain strong. Credit expansion has been very, very weak. So the question is, if you're the authorities in China, what do you do to try to, rekindle the animal spirit, so to speak? I mean, is there a policy that you can imagine? Maybe it's more fiscal than monetary, but is there a prescription here that can resuscitate the economy in a more durable way?
I think there's a prescription, but right now, I think there's still pretty strong hesitation for the government to use it, which is to issue some consumption coupons to encourage the people to spend, or to actually cut some payments on the national contributions, for example, or cutting some taxes to support the household income, which would feed through to household consumption, even though temporarily. But I think there's still strong hesitation for the government to really use this.
In looking at the PMIs generally around Asia, we had some improvement in Taiwan and Japan. We had a little bit of weakness in South Korea and Vietnam. So mixed, I suppose. But in one sense, the policymakers seem to be reasonably patient. So if I could draw a comparison between the Fed, which is showing or asking for patience on dealing with inflation, it's willing to, to see some slow progress in getting to the goal. And it seems like Chinese policymakers are urging a bit of patience. Is that wrong? Should they look for more acute action in the near term?
I think in some sense, they are trying to make policy room for the worst. So if you listen to some of the speeches by the top policymakers, they always emphasize on this bottom line mentality, which is for example, the U.S. election at the end of the year could be a risk. We don't know whether Trump would win the presidency, or if he's going to impose any more tariffs on Chinese goods. So I think in some sense, the policymakers also try to make some room for further policy stimulus. And at the same time, they also understand that if they keep stimulating the investment or the supply side of the economy, it's not going to be sustainable. They want to emphasize on that sustainability. So that's why they're also being pretty careful and cautious in not to do the big bang stimulus that some people are expecting, like what they did in 2008 or 2015. So in some sense, I think this is a reasonable, fair approach.
Brian and I were talking a short while ago about this speech given by President Xi. It's resurfaced, and it kind of suggests that maybe there's room for the PBOC to begin trading government bonds to regulate liquidity. I mean, it seems a little bit like what the Fed has done in terms of quantitative easing on a number of occasions, once during the U.S. financial crisis and more recently at the onset of the pandemic. In your view, is this something that's conceivable, where the PBOC could adopt something similar to quantitative easing as a result, or way of getting more risk into the market?
So in some sense, I think for China, they have always been, there are also other ways to support put it this way. So if you talk about the PBOC buying the government bonds, it could be some kind of open market operations that to smooth the liquidity, to avoid the volatility in liquidity that we are seeing in China right now due to tax payments, for example. And we could see much less volatile path in the interbank rates, for example. And I think that's one way to do it. And the other way that people are discussing about that, which is China hoping to do monetary financing. And on this, I think I'm a bit skeptical on this, because actually there are many ways that China can always finance the fiscal deficit. For example, the PBOC has this tool called the PSL, which is in some way for the PBOC to lend to the policy banks, which in turn the policy banks can actually channel the credit to the economy. So I think actually there's already an existing framework for the government actually to do a so-called quasi-fiscal financing if they wish to. So in some sense, I would be skeptical of why the government need to purchase the government bonds to do this now. And
well, they'd like to get consumer spending, and housing could be a key part of that. I mentioned a few moments ago in our media review that in Hong Kong, we've seen a pickup in the purchase of homes. So there's been a lot more transactions, the most we've seen in 11 years or so. They removed a lot of the restrictions on buying. To what extent have the authorities removed those restrictions in China? And is there any hope to, come up with something that repeats the story we're seeing in Hong Kong?
First of all, I think the situation for Hong Kong, there's some improvement in the new transactions, which I think I would still be skeptical to see if it is sustainable, because, of course, when the policies relax, of course, it's reasonable for those who have been wanting to purchase, then there is a short-term improvement. But afterwards, we need to see the macroeconomic situation, like whether the house, the income, the confidence are improving, which I think is really the situation for China right now, because the job and income expectations are still pretty poor, and the prices are still correcting. So I would think that even though some of the top-tier cities, they could be removing the relaxation the purchase restrictions, we could see some short-term rebound, but maybe at the same afterwards, we really need to focus back on the fundamentals and see if this is sustainable. And I think I'm still skeptical of whether it is going to work. And I think there's still going to be some downward pressure for the prices to correct in the top-tier cities, even that they're still pretty overvalued.
So very quickly, Michelle, about 20 seconds, what's the next move on the part of the PBOC?
For April, I don't expect them to do much, because we've seen some improvement in the March PMI, and I think for the first quarter GDP is going to be pretty decent as well. The next move going to be just watch the PSL if they are ramping up that to support the urban village redevelopment.
Yeah. Okay. Well, thanks very much for joining us, Michelle. Very good stuff there. Michelle Lam, Greater China Economist at Societe Generale.
Well, the Japanese government has approved up to $3.9 billion in subsidies to the chip venture Rapidus Corporation. This is a 19-month-old startup. It's aiming to compete with companies like TSMC and Samsung in the market for contact chip making. Let's take a closer look now with Bloomberg's Peter Elstrom. He is our executive editor for Asia Technology, and he joins us from Tokyo. Peter, it's always a pleasure. Can you help me understand understand what's going on here now? We've been talking about trying to lessen the reliance on chip manufacturing in Taiwan. I get that. And it's kind of curious because quite a number of years ago, Japan did quite a bit when it came to the manufacturing of semiconductors. What's going on?
Right. It was not that long ago that the U.S. was very concerned about the rising power of Japan in semiconductors. We've come a long way since then. Right now, we have advanced semiconductor manufacturing concentrated in just a couple of locations. Taiwan is by far the most important. South Korea is also very, very important. Because of the COVID pandemic disruptions to the supply chain, because of some concerns over China's claims to Taiwan, we've now seen many countries push ahead with trying to build up their domestic capabilities in the semiconductor industry. The U.S., of course, is doing that. They've got the CHIPS Act, where they're allocating tens of billions of dollars to chip companies. And here in Japan, they've been very, very aggressive, too. They do have that foundation from a few decades ago where they were one of the most advanced countries in terms of chip making, and they're trying to rebuild some of those capabilities in a number of different areas. They are giving money to TSMC, the Taiwanese chip company that leads the way in what are known as logic chips. In this case with Rapidus, this is, as you mentioned, it's a brand new venture. It's a domestic company that's backed by the government, and their goal is to build an advanced semiconductor fabrication facility up on the northern island of Hokkaido to produce custom-made chips. It's contract manufacturing, so you specifically devise chips for customers to their designs. This is what TSMC now does for customers like Apple and NVIDIA. In Rapidus's case, they'd like some of those contracts also in, say, artificial intelligence. They also want to make sure that they're able to make those kinds of advanced chips for domestic companies like Toyota and the rest of the automotive industry, which is a real foundation of the economy here.
Yeah, you sort of phased into what was going to be my first question about whether or not this was more support for Rapidus or actually just in establishing Japan. And you've commented on that because they've offered billions to TSMC and I think Micron as well, right? So let's talk a little bit about this specific company, young as it is. It's teaming up with researchers at IBM on exactly what?
Right. So they are using some technology from IBM. They've also had engineers go out to the state of New York to do training with IBM to try to be able to build advanced semiconductors that will be 2 to 3 nanometers at the cutting edge of chip making today. Probably won't quite be at the cutting edge when they plan to come online. They've got a long ways to go here. Just to lay out some of the enormous challenges ahead for the company. Right now, TSMC leads this market and being able to make 3 nanometer chips for things like the iPhone. And Samsung has been trying to compete in that business with TSMC and has been struggling, frankly. They haven't been able to get customers at the kind of rate that they expected. They haven't been able to build up their foundry business very successfully. So Rapidus, again, a company that only was formed a couple of years ago and does not have that track record of being able to manufacture chips successfully, is targeting an advanced technologies to be able to build cutting-edge chips, and it's not at all clear that they're going to be able to fine-tune the manufacturing processes to be able to compete with leaders like TSMC. Will
they rely on equipment manufactured by ASML?
It's a very good question. The reason that Rapidus has gained so much support internally here in Japan is because they have a lot of domestic expertise within the country and within the staff. They're being led by an executive from Tokyo Electron, which makes chip-making equipment. And Japan is actually very, very critical at certain phases of the semiconductor supply chain, including in what's known as photoresist, many of the chemicals and materials that go into the chip-making supply chain. ASML, of course, makes the most advanced chip-making equipment out there. It makes its highest-end machines are EUV machines, which help make 3 nanometer and in the future 2 nanometer technology for customers like NVIDIA and Apple. And Tokyo Electron is a little bit behind that, but Rapidus plans on leaning on all of those customers to be able to make these advanced chips.
So I guess going back to the original question about Japan doing this, not just to support Rapidus, but to try to establish its own credentials as a place to make fabs and to advance and move forward in semiconductor manufacturing. Where is it along that road in that process?
Yeah, it's a very good question, and it's an interesting time where we have governments becoming much more active in industrial planning. In past years, of course, the United States and Japan, sort of the government entities backed out of the market and let private corporations really lead the way. That's in contrast to, say, Taiwan and South Korea in particular, where the governments have been quite successful in helping to support some of these local providers. In Japan, they of course, had a long history of a very active government hand in all sorts of sectors, including semiconductors. At this point, they are trying to rebuild some of the capabilities that they had in the past. Right now, they don't have a leading-edge logic chip manufacturer like a TSMC, for example, or an Intel in the U.S. even. They do have players in the memory chip market, notably Kyosho, which competes with Samsung in memory chips and Hynix in memory chips, but they're not at the cutting edge anymore. So they have quite a bit of ground to make up. As you alluded to earlier, they are helping to subsidize Micron, another memory chip maker, an American memory chip maker that is building out a fab here. But they have some ground to make up both on the memory chip side and on the logic chip side of the industry.
It's fascinating stuff. Good conversation. Thank you so much, Peter. Peter Elstrom, Bloomberg Executive Editor for Asia Technology, helping us understand the investment being made by the Japanese government in the way of subsidies for this new chip venture, Rapidus Corporation. David Finnerty is with us. David is Bloomberg FX and rate strategist. He joins us from our studios in Singapore. A lot of ground to cover here, David. Let's begin with this ISM number that we had for the U.S. in terms of the PMI data. We're seeing expansion on the manufacturing side for the first time since 2022, and the report may be a little concerning to the Fed is that the cost of materials and other outputs increased a bit. Do you think it's enough to really change the calculus when we talk about the Fed cutting interest rates? Should we be looking at not 3, but maybe 2, or maybe even 1?
I think definitely, well, certainly I think so step by step. I think 2 is definitely a possibility. I think there's no question about that. How it plays out between 2 and 3, I think obviously depends how the data comes out. I think arguably more, certainly the ISM manufacturing is important, but really it's a services economy. So I think the services data that comes out, I think it's on Wednesday, will arguably be more important, and obviously the payroll data as well. So let's see how those come out. But having said that, the predictions are they'll come out quite solid. Payroll's about 200. The services manufacturing about 52.8. So certainly solid data, which backs up this idea that, as Fed Chair Powell said, that we're in no hurry to cut. Not that they won't cut, but they're in no hurry to cut. And it does beg the question, if you keep getting this solid data, how many more cuts do you need this year? So the market has ratcheted down its pricing to, I think, 65 basis points at the moment. And I think if the data stays strong, you could certainly make a good case, say, look, actually only 2 rate cuts is needed this year. If it continues strong, then it gets your further point of is actually just 1 needed. And I don't think that can be written off at the moment. But certainly for the moment, I think we'll go for 2 to 3 is the most probable.
In your view, is the Fed kind of fudging the 2% target at the moment?
I don't think so. Look, it's saying it wants 2%. It says that it's going to go before 2%, which makes sense. I mean, you want the trend going down there. And I think the fact that if you look at that dot plot, it was very 50-50. I mean, you had, I think, 10 people going for 3 or more cuts, and you had 9 going for 2 or less cuts. So I think the Fed's saying, look, we'll do what we need to do to get it down there. And if we need to cut less to get that target done, we will. So I don't think it's fudging it at the moment.
So we had a little bit of an upswing in China's economy, at least if you look at the official PMI data for the month of March released over the weekend, and the numbers coming in above estimates. What does it say to you about how well China is doing?
I think it's certainly a positive. I think, when you factor in, Lunar Year and all this sort of effects around that, one piece of data doesn't make a trend, shall we say. While certainly it's positive, I think you obviously want a few more pieces of data to support that and corroborate that idea that it's rebounding. The case for China is, though, even if it's rebounding, it's, slowly. I mean, it was just in, over 50. It wasn't like 53 or 54 where it's strong growth. So has the economy potentially plateaued in terms of weakness? You go yes, but it doesn't all go well that it's like really churning ahead on a very strong footing. Certainly not the same footing that the US economy appears to be on.
Yeah. Well, we had good export data too, so the manufacturing and the export data kind of go together, but it suggests that the economy is a little bifurcated. Consumer activity is still not quite up to snuff, whereas you're getting this little bit of pickup on the industrial side. You have a lot of people calling for, and the reason they say the consumers are not spending is because the housing market isn't fixed. So how do you fix the housing market without taking on more debt? Some people think debt is an even bigger problem. When you look at, this is all sort of big picture stuff. How do you separate the big picture from, the short term?
I think it is tricky. I mean, he makes a good point. I think that some parts of the economy are performing better than the others. And you said the consumer's certainly lagging a bit compared to other parts. So it is tricky to differentiate the two, particularly because the market really does look at a macro picture. And at the end of the day, it's, how's the big picture doing? You can't just focus on one specific bit, because there's always going to be something that doesn't perform as well as you like it to. So I think you have to look at the big picture. Having said that, the property is always something that's a worrying trend. And while it seems to have improved over the last few months, shall we say, from the Evergrande and other companies, those obviously could resurface. I think they do resurface, particularly with consumers being a bit sluggish. That wouldn't bode well for consumer sentiment, you'd have to guess, which could see another downturn in the Chinese economy. So I think the market would definitely like the property sector to be improving more quickly, should we say.
So if you look at a potential policy response, Brian was talking earlier about something he read where maybe you have the central bank using its balance sheet in a way that would resemble quantitative easing. I know when we've talked about this in the past that the people who are really close watchers of the central bank say no way that China would ever do that. But are we getting closer to some type of creative exercise here on the part of the PBOC?
Well, I think the market always wants to interpret anything positively that it can, if I'm honest. So you can't. Look, China, unfortunately, is a bit of a black box, and we don't know exactly for sure what it's going to do. So the recent wording has potentially been interpreted as that way, and you could go look at one. They've had different measures to come out to support the economy, so I don't think you can never say never. I think that would always be a mistake to say never. And are we heading that way slowly, potentially? But I don't think it's something that's going to happen overnight. I think that's the best way to put it.
Yeah, we've got the Bank of Japan story as well. Possible intervention looming with the yen continuing to weaken. Dollar yen 151.64. People talk about 152 maybe as a line. The authorities say they generally don't try to drive the yen in a certain direction, maybe just to send some warning signals. What are you expecting there?
Well, I think what's interesting is I think it was Suzuki came out today, and the finance minister, and was saying we're looking for excessive moves, and yet dollar yen's gone nowhere. I mean, it really over the last few days it's 151 to 152 range. Yeah. So I think they're obviously very worried that they keep banging this over when it's not even really moving. So I think the next border call, I wouldn't be seeing to see a rate check come out soon. I think 152 is key because if that does go, it will trigger some barriers to be triggered in options.
Okay.
Which will see some short covering, so it may exacerbate.
152, that's the number from David Finnerty in dollar yen. David Finnerty from Singapore here on Daybreak Asia. This is Bloomberg.
This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.